So we're going to go through financial consolidation and reporting today with the Fluence platform. Before we go into the demonstration, I'm just going to set the scene with a couple of kind of background slides and just some of the high-level things to think about when we're demonstrating and working with our customers. So when you look at the pie chart on the right-hand side, we're looking really at all the functions from the Office of Finance perspective. Not just the FP&A needs, the close and consolidation management cycle, and then the financial and management reporting. So everything that we see in green is really focused around our platform from Fluence perspective, from account reconciliation to consolidation to close management to management consolidation, financial reporting, dashboards, and ad hoc reporting. So we're going to be focusing not around the account reconciliation today, because that really deserves another talk track and another demonstration. We're going to be focusing mainly around the consolidation and financial reporting perspective. So from a platform and a solution aspect, we are out of the box. We are a no coding interface. We are cloud-based, we are Excel. So what does that all mean? When you think about out of the box, it's providing the users and the customers and the finance team with functionality that's built into the application. They're not having to code or having to build, things like currency translation methodologies, intercompany matching methodologies, into investment elimination methodologies. All of these are out of the box, and they are truly configurable by the customers, finance teams with no coding. So when we talk about coding, that's when organizations may need to do visual basics to achieve some basic functionality. We don't believe in that concept within our platform, so everything we do is point and click, drag and drop with that out of the box nature of the solution. And we'll see that in practicality when we go through the demonstration. We are cloud-based. We are a multi-tenant application from a deployment perspective. We are single tenant from a database, a segregation of the data from every customer. We keep that private. We are SOC 1, SOC 2, ISO 27001 compliant from a security perspective. We are based on the Microsoft SQL Server and analysis services backends. That is really, just to let you know that we are really a Microsoft-centric application. We utilize also Excel from that front end viewing into that consolidation functionality. So we utilize Excel not for calculations, but for really viewing and having that as a lens into all of that out of the box, no coding interface that we've talked about prior. And this will become apparent when we go more into the demonstration. So just drilling down into this, some of the key things to think about here are, we've talked about out of the box, we've talked about connected Excel. One of the things to think about from an overarching consolidation perspective is, things like the ownership. When you think about an organization, when you think about subsidiaries, when you think about currency, when you think about all of those things that go into a consolidation, it's not just aggregating the data. It's doing some on-top elimination, some translation of the data, not just from an average rate, but a closing rate, the opening exchange rates, historical rates. We have all of that built into the solution. When you think about the organization, it's not just going to be 100% ownership from an entity perspective. You're going to have NCI minority interests. You're going to have equity pickup eliminations. You're going to potentially have joint ventures. So we have all of that out of the box. So no code ownership means you are pointing and clicking, and it's all time-based. You can decide and have organizations evolving over time. So 1 month you own an organization of 30%, then the next month 40%. So it's going to track that over time as well. Time basis is also a key feature to, not just the organization structure. So when you make an acquisition, you want to have pro forma reporting. You want to be able to see the organization moving forward with new acquisitions and prior periods when you didn't have that acquisition. So we have all of that time basis built into the dimensionality, the account hierarchies, the entity hierarchies. Every single dimension gives you that concept of time-based calculations, but also the time-based organizational change and transparency over changes made across all of your elements, all of your account lists, product codes, and all of your entities, just to name a few of them. We also support the ability to have multiple organization hierarchies, So if you want to have a management entity reporting hierarchy, we can support unlimited alternate hierarchies. That concept is available across all of the dimensionality. So if you wanted to have an alternate account rollup, an alternate product rollup, just to mention a couple, we support all of that multi-dimensionality, alternate hierarchies, and time-based structures across all of our dimensions. So those are just a couple of key things to focus, some of the key features that we like to talk about throughout the demonstration. Now, when you think about consolidation, we think of it in two kind of key areas. And some of the key differentiators, this isn't necessarily focused just on the Fluence side, but it's when you think about what is a true consolidation system. We know that some organizations can be, very simplistic and not very complex in their ownership. Maybe there's only one or two, or entities that need to be consolidated. So some of those may fall into kind of the iceberg, above the water, where it's very basic consolidation functionality. There's still some of the things that go into that, for example, foreign exchange, cash flow. But because there's not that many entities, it doesn't really get into some of that, complexity when you're dealing with, a number of different ERP systems, a number of different reporting jurisdictions, and a number of different, ownership scenarios from that perspective. So many organizations, look to consolidation and maybe think they can get away with that basic functionality that's really above the water. And some solutions out there, some planning solutions out there have built consolidation solutions really to focus just on that basic area. But when you think about the advanced side, think about what's below the water. Think about what happens when organizations, have a complex ownership. And that could be not just around how much you own in your subsidiaries, whether it's equity, minority, NCIs. It could also be your organization is evolving over time. So you acquire different sections or different parts of a business over time. You may have cross ownerships within your organization as well. So when you start to get into the advanced side, it's not just thinking about that basic, it's really getting down into, the complexities around the ownership of your organization. Looking at things like the currency translation adjustment, alternatively known as CTA. It's looking at that not just from, some organizations have a plug number. This is our, P&L, our retained earnings, or our current profit coming into our equity section of the balance sheet. That average rate, we didn't need to plug that to bring it back in line with the closing rate. We do CTA not just from that perspective, but across the whole of the balance sheet. So we're very granular in all of that perspective. So when you think about some of the advanced functionalities that come into the consolidation, that's really when you need to look at, who are those vendors that are really going to satisfy those requirements. And obviously Fluence, we fall into that category. And, we're going to give you that benefit from that perspective. So you're going to see not just the basic side above the water, we're going to dig into that advanced side of the consolidation perspective today. So that's just really setting the scene. I'm going to come now into the demonstration now and give you some of the high levels. I'm going to dig into a number of different areas within the platform perspective. But today, I really want to focus on the application and some of the key things that we've talked about from the overview perspective. So when we first come into Fluence, you can see we're accessing everything through our web front end here. So we are agnostic from a browser perspective, and this is giving you flexibility to see all of that interactivity across the dashboard that we're seeing here. So this is our home screen. Our current scope is looking at this from, a number of different perspectives. You can have a number of different tabs that represent not just different tasks. You may have account reconciliation in here as a process. You may have market intelligence here as a process. You can have a number of different processes that will satisfy different teams, but also different reporting and different business requirements as well. So we're going to focus around the consolidation workflow today. You can see we have a number of different tabs here. One of those will focus more into this particular area. These home screens can be configured to really display what is required from your perspective. They can be team specific. They are also user specific as well, really to take you down and focus on what you need to understand and how you need to have a view of your business. We can drill down and actually get into different reporting. So we can launch reports directly from the quick links here. We can also go into, different websites. You could provide this not just as an overview to our platform, but also provide the aspect of then providing information and really focusing this to give you, communication amongst your team. Maybe a new, financial reporting standard you need to communicate. Maybe it's a new piece of information that you need to collect from that perspective from your teams as well. So it's your ability to provide information and really to focus out to and communicate to your team different aspects that you want to make them aware of. So that's really looking at this from a home perspective. You can see that we've got certain tasks that are in progress, you've got certain that are upcoming. So it's going to give you the aspect of where you are from not just this workflow process, but if you had multiple processes, it's going to aggregate those up into the score that you see here. So as we go forward, you can see that we're going to really be focusing around the consolidation perspective today. We're going to go into the workflow view, and you're going to see where we are from that current perspective, not just from a diagrammatic perspective here, but you can see each of those tasks listed out, what's in progress, what's upcoming, and if there are any, you'll see those that are being completed tasks within that list. So we're going to dig more into that workflow and kind of the process flow of how you work through that current close, that current reporting, cycle, whether it's for monthly, quarterly, or yearly consolidations. So you'll see that we started the workflow. We are currently in progress with these particular processes here, and we'll dig into these. We also have the ability to see where you are from a sub-process perspective. So what's coming into maybe a different team focuses just on the USA consolidation, another one on the European consolidation, another one on the Canadian consolidation. So you can design these workflows and configure these to be exactly how that team works, the workflow and the tasks around that, but also design that from a specific task and a specific process perspective. So we're going to dig into each of these aspects. We have built into the workflow the ability to have that modern communication. So we're not just linking in with things like Teams, we've got Slack integration, we've got email integration as well. So we're going to give you that modern communication platform that when you pass or want to communicate something out, when you go past a certain stage, you can then send those emails, those messages out through all of those different mediums. So that is fully supported within the platform. Teams rooms, Slack channels, email groups, all of that is fully supported within our communications. So one of the nice things also is this isn't just around the process. You can exhibit and have available reporting directly within your home screen. It's going to give you the availability to really determine maybe certain reports that are available from a high level. So when you think about reporting from our platform, we create once and we have the deployment not just in Excel, but across the web formats that we see here and across mobile devices like iOS-based devices and Android-based devices. We're going to give you that full kind of circle around all of those different reporting needs. So if you're on the road and you want to have a view of this dashboard, you can absolutely pull this up on your tablet or your mobile device as well. So it's going to give you that full exposure across all of those different mediums. So when you think about the dashboard and you think about what we're seeing here, it's not just down to the different widgets we're seeing around the different ratios. We're looking at charting. We're looking at waterfall charting, which is something that we add above and beyond the Excel reporting from that perspective. So we really add and we really give you that flavor, not just from giving you all the functionality of Excel. We've enhanced and give you really some deep industry specific functionality around business reporting, business charting, and provide that in that out of the box approach and owned by finance, author in Excel, and then give you the ability to publish and have that available in a number of different mediums. So author once, have that available through many different aspects. We're also going to give you the flexibility to say, I want to focus this and look at maybe one of my divisions. Let's look at Europe. This won't just change all the charts, it will change the map as well and give you the focus of exactly where you are and where your subsidiaries are based from that mapping perspective. So we have a number of different reporting options, and this is giving you kind of that interface to show you exactly how we're interacting with that data. We also go down into a more formatted report. So if you wanted to have a nice looking profit and loss report, a nice looking balance sheet, a nice looking cash flow report, we're going to give you the ability not just to have those highly formatted dashboards, the ability to have, like this butterfly star report. You've got a periodic, so periodic versus year-to-date information. Periodic isn't just month to date, it's quarter to date, it's 6 months to date. So whatever that periodic to date is, you have that full flexibility within the application. We also have the full flexibility to pull in budget, forecast, plan information. So you can pull that in from your budgeting and planning solution directly into our platform. Not just to give you the like-for-like reporting, we can consolidate all of that information with exactly the same rules that you've got from the actual perspective. We can do cross-currency conversions as well, so you can do that constant currency reporting, actuals at budget exchange rates, budgets at actual rates. You can incorporate all of that what-if thing directly into not just the reporting, but into that currency conversion methodology also. So when you look at a report like this, you may want to drill down. We're looking at total group. You may want to go into the USA subgroup, and you may want to just focus on one subsidiary. So you author once a report, and you have that available across all of your different entities, all your different time periods, and also against all of your different currencies. So I could see San Francisco now in euros, and it's just going to pivot that information and show me the euro currency converted version of this report. So when you think about reporting, this is the output of your consolidation. Everything that goes into this, we're going to be covering to how you get to all of those alternate currency conversion methodologies, how you're going to get that budget data in, how you're going to then do the eliminations, not just from the subgroup level, but all the way through the reporting side. So this is just another flavor of an income statement. You can see we have this comment field here. So we fully support the attributes of adding comments directly into your report. So comments can be, a simple comment. You can reply to a comment. You can actually attach files directly into these. And these are all context sensitive. So what does that mean? It means that ultimately when we come into this comment is linked into this intersection. So if I now change this and say I want to look at the USA overall, I can run a report to show me all the comments, but I also have the flexibility to add a comment at the consolidated level or sub-consolidated level. So very flexible. So if you want to then add commentary onto variances and to be able to provide kind of that online comments with replies, you can have that as kind of your chat. We have that fully available within the reports. So these are some of the static reports, the dashboards, the nicely formatted income statements. You've got the ability then to change the perspective through what we call slices to then see these one reports available across the different platforms. You can then get into the ad hoc nature of the reports. So when you think about an ad hoc nature, it's the ability to drill down on your dimensionality, your account hierarchy. So a dimension is an account list, rolled up into the different sections. You can then utilize that dimensionality. We're looking at accounts to then drill down through our account hierarchy as an example. So you can just see you have that standard double click, and it's going to drill you up and drill you down through the actual hierarchies. The same goes when you're drilling across. You can drill not just down and up, you can drill across into those dimensions. So anywhere you have that, levels within your hierarchies, you're going to have that ability to drill up and down. One of the other nice things is you have the flexibility to say, hey, wouldn't it be nice to see my entities across my columns as well? So I can just drag and drop entity and drop it directly into my column. So now I'm analyzing this by time, but also by entity. And I can just, again, double click on this, and it will take me down into that next level from an organization perspective. So ultimate flexibility. We're going to give you that analytical perspective to really drill down and drill across into your organization, to your consolidation. But we're also going to give you those more formatted and more designed reports to give you kind of that high level view where you are from a month-end perspective, and then giving you that kind of interrogation of the data as well. We also have the flexibility to take the data, print it directly from here. We also have the ability to enable PowerPoint downloads. You can then create a PowerPoint of some of your reports to then produce that management reporting deck. We can take this same report and have it as a fixed report or a live report and have all of that same interactivity in Excel. I mentioned earlier that we have these reports. We can then publish these reports and have those designed in Excel and then published directly into the web. So just to show you that, I have this same report within Excel. I have all of that same interactivity. Double click, and it will drill down through the report. I have a Fluence Excel add-in. So this is giving me above and beyond what we talk about from an Excel perspective. We've got those business charts, those waterfall charts we talked about. You have the full flexibility to design the reports as you want, and you have that flexibility to publish everything you've created here into the web, into those prior views that we've seen. So anything you create, you can then publish and have available to a wider audience within your organization. Now, one of the nice things that we have here is the ability to do what I would call calculations that flow with the data itself. So typically, if you want to do a variation between, for example, 2021 and, for example, 2020, you would do just an Excel calculation equals this versus this. Great, but what happens when you expand on this? it's going to just keep that calculation in that same spot on the report. So it's not going to be intelligent to move with that grid when you update that data. So how do we do that within Fluence? Let's just click on this column, and I'm going to come to this grid, which is synonymous with this grid type of view of the report. So you're going to see different things come up. If you're in a chart, you're going to see a chart come up here. So it's going to give you different perspectives of exactly where you are and what you can do within those grids and reports. You can obviously remove and unhide empty rows, empty columns. So if you want to see zero values, it's going to give you that perspective. But what I want to do is add a column calculation. It's going to ask me if I want to overwrite, which is saying, yes, I want to overwrite that column. And it's going to now add a new column into the report. And all I do, Excel formulas, again, equals this minus this. But instead of being outside of the grid, that formula is now contained within the grid. And it's linked into this intersection of the data. So if I now double click and drill down on net income, you can now see that that calculation is flowing and it's showing all of the different aspects of that. Another key benefit of doing a calculation like that is if I now drag and drop the entity dimension, which I did in the web earlier, if I now double click on the total group, you're going to now see that calculation isn't just linked into the total group, it's going to be rippled across all of those drill down paths that I have. So that calculation is now smart because it's going to move with the dimensions as I drill up and drill down, and it's going to stick with this intersection here. So you're actually tying that calculation to this intersection. Any other aspects, any other areas you want to drill into, it's then going to replicate that across the board. So we provide a very flexible Excel-based reporting, but giving you then the flexibility to publish that and have those reports available directly in the web that we saw earlier and we saw here within the demonstration. So reporting is very intuitive. It's meant to be designed by the finance team, the business users, and it's meant to be something that could be picked up by anyone that's got those Excel skills. So we've now looked at the reporting. So what I'm going to do now is focus really around that consolidation side, really around what goes into the consolidation to get to some of those nice reports we've just looked at. So we have the workflow, and we've talked briefly about this. We've talked about where we are from a workflow perspective. If I want to now, I can come into my reports and analysis stage. We've looked at some of the reports. I've got other reports that we could go into later on. But what I want to do now is say this task is complete. So what you'll see is when you come into and open up one of these tasks, it's going to list out what's in progress, what's upcoming. And as soon as I click on one of these, it's going to show me those elements that are available within those individual tasks that are available as part of this overall section of the workflow. You'll see the Excel lens. So this is what we're talking about that lens. This is when you get that lens into the consolidation. And you'll see this in a bit more detail. But what I'm going to do now is just say I've completed this task. I don't really need to look at any more reports for now. And you'll see that now moves down to the bottom of the list. All of this is linked into the user. So you'll only see what's currently available for you, and you'll only see the tasks that you're assigned to. And I'll show you this a bit later in a bit more of a kind of calendar perspective in the reporting side. So we're going to now come into the administration. Now, as part of that initial overview of the solution within the PowerPoint earlier, we talked about owned by finance. We talked about the ability for the application to be really configured, no coding, no scripting. Everything is done through standard configurations. So what do we mean by that? I'm not going to go into everything within the setup, but we have, support for the alternate rollups. We have the support for alternate hierarchies. We have the support for time-sensitive hierarchies. I'm not going to go through all of that aspect today, but what I do want to go through is really understanding what do we mean by that owned by finance? What do we mean by the configuration? Build versus buy versus build. We're obviously on that buy side. So when you look at your chart of accounts, we're looking at the income statement here. We can come down and we'll get into the balance sheet, and you'll see certain things, the classifications change. You'll see certain configurations change, like the opening balance rule. You'll see certain things like the currency conversion rules changing. So when you think about the configuration and think about consolidation, these are all the things you need to think about. Opening balances are key, not just for your balance sheet, for just seeing what's your opening and closing position, but when you come into the cash flow, it's the ability then to see the movement between your opening balances and your closing balances, and ultimately then get into a cash flow that you are fully configured and fully defining and fully, I would say, calculating from the balance sheet and income statement. So the use of what we call the opening balance, this has really become apparent when we talk about one of our really critical dimensions to the consolidation process, which is our movement dimension. I won't talk too much about that now, but think about the opening and closing and the impact, not just to see the movement on the balance sheets, but when you come into currency translation, really seeing things that converted at different levels. So that is one of the aspects we think about from the perspective of pre-built out-of-the-box functionality. Also, the type of account it is. Is it an asset? Is it a statistical non-financial account? Is it an income account? Equity account, expense account. All of these categories are predefined. So when you import the data, when you bring in your chart of accounts, you can define all of these attributes on the application. Debit credit. So how are you going to book those journals? So manual journals, automated journals. So how's the system going to know what's a debit, what's a credit? We set up that financial intelligence just once on the chart of accounts, and then the system's going to know exactly how to book and treat those adjustments when we do those auto eliminations and when we do those manual adjustments. Things like the currency conversion rules. So think about your consolidation. It's not just the average rate and the closing rate. It's your opening exchange rate for your opening balance sheet accounts. It's your historical rate for your historical investment accounts. It's your ability to account for things like temporal methods of consolidation. So when we think about temporal method, you're thinking about hyperinflationary situations. We account for that and we have that as standard functionality within the solution. Consolidation rules are really where you're going to do those eliminations, intercompany eliminations, investment eliminations, equity pickup. Which are the accounts that you're going to be utilizing for those calculations, for those eliminations that you're performing within the application? So think of this really as what's happening, not just from an aggregation, but what's happening behind the scenes when you do that true consolidation. Consolidation isn't just aggregation. It's a combination of currency conversion. It's opening, copying, opening to closing balances. It's your investment eliminations. It's all of those eliminations and things that go alongside of that. So that's just one of our elements we look at. So if we look at the organization structure, we're just looking at one organization structure right now, but I could look at, an alternate roll up if you want to, but I won't get into that so much today. You think about the local currency. So how's that data coming in from a, local reporting currency? It's going to come in that local currency, and Fluence is going to perform the currency translation based on the roll up of the different, group currencies, but also based on the ability to have additional reporting currencies. So ultimately, I could see any of my entities, any of my consolidation points in any different currency I wanted to. So multi-currency, not just seeing things consolidated to one currency, but if I want to see the total group in Canadian dollars or euros, I have that full ability within the solution. We talked about the temporal method of consolidation. So if you have certain entities that need to use that integrated temporal method, you set up those entities and you say which entities are going to comply to the integrated method of conversion as opposed to the current method. That's just a configuration. The same with the closing period. If you have entities that have a different year end, you make an acquisition, their year end is February, and your year end from a corporate perspective is December. The ability to line up the profit and loss statements and bring it back in line with the year to date of the corporate year end. We have all of that built in. It's not something you do outside the system that other systems you might look at have to do. We have that built in. So the concept of the non-coterminous different closing period year end, we have that fully built into the application. Just one other area I want to focus on is just scenario. You may be looking at, for budgeting, planning systems. We have the flexibility to pull all of that data and have that full integration. We can pull that budget data. We can feed the actuals into the planning side. We can pull that forecast. We can have as many scenarios as you want to within the solution. You also have the flexibility to say, hey, I want to do a currency conversion of my actual data at budget rates. Some systems you may have to copy that actual data. You then have to copy the exchange rates. You then have to run a conversion. So there's a lot of copying and, creation of additional sets of data. So what happens if your actuals change? You then have to copy them again. Within Fluence, we don't need to do that. You're just saying, where is my source data coming from? It's coming from the actual data set. Where's my budget rates coming from? They're coming from the budget data set. So all we're doing now is linking we're not copying, and all we're doing is saying we're going to pull our local currency from here, and we're just going to convert utilizing the budget rates coming from here. So this is detailed, in-depth, out-of-the-box functionality. No copying, no scripting. You're just configuring how and where you want to copy, or not copy, where you want to configure, and where you want to get those exchange rates from. That's going to provide that information out of the box. You can also have that flexibility around last year rates, last period rates. This is just looking at rates -1 for the year, rates -1 for the period. So again, we don't just have to look at, just things on a rate scenario. You can do it on time period perspectives as well. So very, very flexible. And the reason we show you this depth is really to show you the configuration. You're not having to script, build anything from the ground up. Everything is configured, everything is defined. All you're doing is selecting from the selection boxes and then choosing what you want to pull out from that scenario. So again, just showing the flexibility, showing you the aspects of that. This also goes into things like the ownership. So think about your organization structure. Yes, you have the entities rolling up, maybe to different subgroups, maybe subgroups. You're going to have sub-consolidations. You're going to have your total consolidation. So the ability to have and manage ownership within the solution is key, again, to understand the configuration, depth of consolidation functionality we have, and the breadth we provide from that standard configuration perspective. We're just looking at the US subgroup. We're looking at the actual scenarios. You could have different ownership for budget data, what if. So you could do that pro forma reporting, or say, what if we own all of our entities at 100%? So you can model that. You can do what ifing around the ownership of those hierarchies. We also have the flexibility to have what we call cross ownerships. And you can see that this entity, Los Angeles, is owned not just by the USA group of 75% up until December, but it's also owned at 85% by the total group. So you've got an additional 10% that's owned by the group, but then you only have a NCI, a minority of 15% when you consolidate the total group. So the application knows that at this level is going to eliminate at a 25% minority, and at this level to eliminate at a 15% minority. So we have that intelligence built into our standard configurations. You can also see that within here, New York is owned by two different parents, USA and Canada, both at 30% equity method. So again, you are just defining and picking the methodology you are defining for that. When it gets up to the total group, the system knows that it's owned at 60%. So it needs to know that it's going from an equity pickup elimination to a minority NCI elimination at this level. So it handles these complexities, handles these cross ownerships, handles the ability to have different ownership at different levels within the organization. And we also have that tracked over time as well. So that time base is coming back in. You can see we're changing the ownership over time. So what's going from a 75% to December is going to an 80% from January 2021 to infinity at this particular point. So we can track the ownership over time from this perspective. So very flexible, very intuitive, but also giving you that breadth and depth of functionality. When you think about the advanced below the iceberg consolidation, this is where we really fit and where it gets into those complexities that really those basic solutions don't get into. Foreign exchange is just where you're holding those foreign exchange rates. So you have the ability to hold the average rates, the closing rates. Everything in the system is held against that base currency. So our base currency in the application is US dollars. It could be euros in your example. It could be Canadian dollars. When you enter the exchange rates, you're entering them against the US dollar currency code. So what does that mean? It means if I wanted to convert, from example, euros into Canadian dollars, we're going to use a standard triangulation to then calculate the rate going from euros or Canadian dollars into euros based on all the exchange rates being entered against US dollars. Very standard, but it's good to see you don't have to have multitudes of exchange rate tables to then do those cross-currency conversions from euros to US dollars and then US dollars to Canadian dollars. So that's just an example I gave there. So we hold all the exchange rates in the application, and yes, we can interface and bring those in from other source systems if you wanted to. I'm not going to go into some of the rules, but this is where you configure, things around, the intercompany eliminations, but really where you set up some of those configurations of how it's going to eliminate your intercompany, how it's going to do validation rules. But rules, again, you're just configuring and working with the solution. So we've now completed a number of different tasks within the workflow. You're going to see those ripple down, and you're going to see those available down to the completed side. You're also going to see where we are from an incoming perspective. So what's in progress and what's upcoming. So you're seeing all we're doing is really working through the workflow. All we've done up to now is look at the home screen. We are now in the workflow side, and we've opened up a task. And in doing that, we are integrating with those views, those templates, those windows into the consolidation through Excel. So no menu structure, no ability to hunt and peck from that perspective. And this is critical, especially for consolidation. Consolidation is a once a month, maybe twice a month, maybe quarterly time frame. So it's not an application that everyone is in every day of the week, every minute. So when we provide those guided workflows, those guided tasks, we really make it intuitive for those, occasional users to come in and know exactly what they've got to do and perform within the consolidation. So once we've completed that, I'm now just going to open up this window here. And this will show you a Gantt chart of where you are from the starting perspective, what you've got upcoming, the days it's due, so you can see exactly when something's due, what's completed, and you can see that listed out by those different individuals as well. So from a high level, you can now sort by the owners, the supervisors, the contributors. You can also see where you are from an overall completion status perspective. So tracking where you are from that month-end close, the quarter close, exactly where you are from that reporting cycle. So great to have that visibility. So I'm going to come into the import of data. Now we can do automated imports. We can interface directly with your ERP system. For example, it could be Microsoft Dynamics, it could be NetSuite, it could be SAP. We have direct connectors that can connect directly into those data sources and pull that data directly into the consolidation from a trial balance perspective. We also have the flexibility to import data directly from the application. So I may come into this and say, I want to import the data from my import file. I may want to come into this and say, I have a specific folder that I've used for my importing of data. So I have the flexibility now to say exactly where is my data coming from? Where am I importing that data directly into the platform? So I'm now saying I want to look at this from an Excel perspective. So I'm just going to interface. I don't have NetSuite. I don't have Dynamics. I don't have SAP. The concepts are exactly the same. When we import data, you may have a different chart of accounts. You may have a different, a set of mapping tables that you want to map from your local chart into your corporate set of accounts. That may be for your products, it may be for your cost centers. We're going to give you the flexibility to import the data through mapping tables across all of your account lists, product lists, entity lists, if they're different. If you add a new account in your local system and it's not mapped correctly, then the system will tell you and we'll go through a mapping process to update that. We fully support wildcards and ranges within that as well. So if something falls within that range or that wildcard range, it will then get imported automatically into that wildcarded range. So I'm just going to go ahead and say open. Once we open this, it's going to say it's going to import into that staging table. We're then going to go through the process of then comparing against the mapping table. And if nothing is a problem, which it isn't here, it's going to say that data import was successful. If it wasn't, you would have a message coming up and telling you exactly what you need to update from a mapping perspective. So we have all of that automated, manually triggered imports like this if you want to. We could schedule that as well. So those files could go to a specific folder location and we could import directly from those as well. So you can absolutely time and have a sequence and a schedule around those tasks you're performing. So once data comes into Fluence, you may want to see this in a number of different ways. So I'm going to come in now and look at my review side. Let's just come in and say I want to now review my report. You'll see we have a number of different templates. We're going to focus on a couple of these today. When data comes into your solution, we have the flexibility to see data not just by the one column. So when you think about a consolidation, when you think about that data coming in, you think about your audit trail. Your audit trail isn't just coming in and just looking at your data coming in from your source system. What happens if you have an intercompany elimination? What happens if you have an investment elimination? Maybe there's high-level corporate allocation adjustments that need to be completed. Maybe there's one-time IFRS adjustments, gap adjustments, multiple jurisdiction adjustments, where you need to report according to those different reporting standards. We can hold all of those in the application and the solution. So we have what we call our audit dimension. Now, our audit dimension takes the data and breaks it down into subcategories. And that really comes down to where that data is sitting. We have local reporting, which is coming in from your local subsidiaries. So this is where you've got that data coming in from your source system. This is our trial balance. You never, ever, ever want to adjust that. You then have the flexibility to have manual adjustments, whether they are reclassifications, intercompany adjustments. Maybe there's an adjustment you need to make for an intercompany difference perspective. Maybe it's a manual journal. Maybe it's then coming into corporate adjustments. You have the flexibility then to put those adjustments into buckets that then you can see the complete audit trail from what started from your trial balance all the way through the manual adjustment process, the corporate adjustment process, into then some of the automated consolidation adjustments that you're going to incorporate. So we have that full audit trail across your accounts to show exactly what's changed from day one all the way through to your final reporting. And again, this is fully flexible. These are just categories we've defined for our demonstration. They can be very different for you as an organization. So when you think about this, think about an adjustment you want to make to that. So if I wanted to add a manual adjustment into this and see the impact of that in the report here, if I come back into my dashboard, we have a full journaling capability. Now, typically, most organizations want to apply journals to their source system and then re-import. We fully support all of that. But there may be one-time adjustments, reclassifications, last-minute order adjustments that you don't want to go through that full process of re-importing your trial balance. So we fully support the ability to have adjustments by category. You saw some of those in the columns, by entity, by currency. You can also have that description, that comment field. You can attach documents if you wanted to. You can have the one-time, one journal booking, or you can have a recurring over time as well. So journals can be one time, they can be recurring, they can also be reversing. So if I look at my details here, this will now take me into a sub screen to show me where this journal is hitting. It's going against cash and salaries payable, and it's going to be 2,000 debit, 2,000 credit. Just to show you, we have validations to make sure that all of your journals balance. Debits and credits, all of that should balance out from that perspective. So when you think about what we're doing here, we're not just providing the validation from an audit trail, we're also providing that debit credit check across, not just journals, but when you come into importing of that data, does my balance sheet balance? So we'll look at those validations in a moment. So this journal isn't posted. You can see there's a no here. So we could have a certain individual, segregation of duties here. I could have one individual who is the suggester of a journal, the creator of a journal, and then someone else that's the approver who has the ability to come in and then say, yes, I want to post that adjustment. So if I'm that person, I then have the flexibility to come into that journal, let's say post, which is done, and you can now see that journal is yes. So we've now posted that adjustment. So what impact has that had to the report? I'm just going to go ahead and refresh this. And what this is going to do now is going to refresh the whole of the report. It's going to come in and go back to where we started. Let's drill into the statutory reporting. Let's drill into management. Let's drill into local reporting. And what you'll see now is we now have $2,000 in that manual journal bucket. Let's expand on this, and you're seeing it's going against the manual journal category, against cash, and then the other side of that journal is going against salaries payable. So we're never, ever affecting the source. We're putting that journal in this category. We've got a full audit trail, who created it, when it was created, and then you're seeing the local reporting, including that adjustment and the local source data. So very flexible ability to report, not just multiple jurisdictions, but maybe have for management reporting corporate adjustments that you don't want the local subsidiaries to see in their local reporting version. So very flexible from an audit dimension perspective. So that's really focusing on adjustments. Now, when we get into this in a bit more detail, you may think about other schedules, maybe other disclosures you need to report on. So you may have accounts receivable, accounts payable. You may have a subledger or another system that's providing the detail of that from an aging perspective. So what is aging over 0 to 30, 31 to 45 days? You have the flexibility to set up your aging schedule and then ultimately how that data is going to be reported and displayed within the solution. So when you think about your trial balance, you're going to have that data coming in maybe to total, AR, total prepaid expenses. You're then going to want to break that out by, what is that aging schedule? So you can do that through the additional analysis through what we call our movement dimension. So this is one use of that movement dimension to say, I want to break these accounts out by these different categories. So I'm seeing the movement from what started off to the movement based on all of these different expectations from an aging schedule. So if I come into here and just type in 1,000, this is now saying that this is taking off from that trial balance load. So when we uploaded that data from the trial balance, this is a subsequent schedule, maybe coming from another input or an import, but you can provide this as an input schedule to then provide that additional detail. And you can see if you're out of balance, if I try and save this, it's going to say, continue saving, yes or no. So you can make differences that are hard coded, or you can make those soft validations into the application. So when you're entering data, when you're reviewing data, not just on the debits and credits, but subsequent schedules that need to tie out, validate against that trial balance number, you can provide those validations directly into the template. And this is that first view of that movement dimension. It's the ability to have your standard account and then transcend across different analysis on top. This is looking at an aging schedule. We're now going to look at the key benefit of the movement dimension on what we call our balance sheet continuity schedule. So this is showing things now on an opening perspective for our fixed assets. We'll then see the closing balance, and then ultimately how we get from our opening to our closing position. So when you think about your balance sheet continuity schedule, it's not just looking at those subsequent schedules like the aging, it's looking at how you got between your opening and closing for that time period. So Fluence, we have an automated process to say we need to copy those opening balances. So when you copy an opening balance, it's going to copy from the last year closing period into your opening bucket within your movement schedule. So this is across not just your fixed assets, but it's going to be across the whole of your balance sheet, and we'll see that in a moment. You can then see what is an increase, what is a decrease. This could be different terminology for you. This could be an addition and disposal. So it's giving you the flexibility then to track the movement from your opening to your closing position. And you'll see now if we come across the closing, you'll see where we are from that closing perspective with those total cash variations combined here as well. So when you think about the solution, we're thinking about collecting data, not just from that ending balance, but drilling down and understanding how you got from that opening position to your closing perspective. We also have in our movement dimension this business acquisition, which is often a question that comes up from clients. So where do I put my opening balance sheet for those acquisitions? Typically you don't make an acquisition on, the 31st of December, so it wouldn't go into your closing period last year. Typically those acquisitions are partway through the year and it could be in any month. So when you want to hold that opening balance sheet, we utilize the movement dimension then to populate and pull in that opening balance sheet, not just for your PP&E, but across the board from your balance sheet perspective. So this is where that balance business acquisitions movement comes in. This is where you hold your opening balance sheet. So very flexible from that perspective. So let's look at these two numbers here, and let's try and understand these numbers from a cash flow perspective in more detail. So we've got an increase of 133, and we've got a decrease of $4.2 million in change. So let's come now and look at my cash flow. So when you think about how you make up your cash flow is typically your movement between your opening and closing position. There may be some nuances in there. Obviously, you've got your net income coming in, adding back of your depreciation. But when you think about a cash flow, many organizations have this as a separate report. Maybe it's a once a quarter thing. Maybe it's a once a year thing. Maybe it's just at a consolidated organization level. When we think about a cash flow, we just think about it as an integrated financial statement. You can do it at subsidiary level. multiple currency. You can do that any currency you're converting your balance sheet and P&L. You can do it at sub-consolidation, sub-consolidation. You can do it at the total consolidation level. So we have this fully integrated into our chart of accounts. So what does that mean? That means we automate. This column here is fully calculated, fully automated from our income statement and balance sheet. We don't say we can automate the cash flow 100% because you may have one-time reclassifications, presentation, adjustments you want to put against your cash flow. So we're going to give you the flexibility to make those adjustments in your cash flow. But this column is fully automated, not just in local currency, but we're going to look at this again in converted currency in a moment. Think about that movement schedule we looked at, the purchases of PP&E. Let's go back to that movement schedule, that continuity schedule. That's the number we're seeing here, sign reverse. We're doing that automatic sign reversal as part of the configuration of our cash flow. This number here, we can tie that number directly back into our cash flow, seeing this sale of PP&E. So we're not just looking at the movement, we're looking at that movement based on, is it an increase, is it a decrease? And then having our cash flow configured to read directly from those elements of our balance sheet. So very flexible from that perspective. We're also giving you the ability to see, hey, the change in AR, this is just that variation from our AR opening to closing position, and we are automating that variation. So let's look at that in a bit more detail. So we don't need to have our continuity schedule open anymore. That's really very self-explanatory. It's holding the movements between our fixed assets and just, putting those into the increase, decrease, additions, disposals. You can then see that business acquisition. So how do we get to our overarching and see a validation of the cash flow from the AR AP perspective and any other of those change in numbers we see from that perspective? Let's open up our validation report. Our validation report is going to show you not just validations from what I described there on the balance sheet, but it's also going to show you your current period validations. So think about when you import the data, think about the AR aging schedule. You may have a detailed schedule that breaks AR AP out by the aging. You then want to have a validation to say that data should tie in to the number coming in from your trial balance perspective. This could also be, does my balance sheet balance, does my net income tie out to my, as an example, my net gain loss in my balance sheet equity section. So we build all of these validations into the solution. They are configured, and you define when you want those validations to appear. Do you want them to be monthly? Maybe you've got less validations for a month than you do for quarter end close. So you can define these and configure these for whatever validations you need to see within your environment. You can do soft and hard validations in here. So you can't then pass this process, move on the process without everything being fully complete. So something that's red needs to be solved. Something in yellow is kind of like a threshold you've got on that validation. So you can build that threshold analysis in. So really a validation is based on what do you need to have, how do you want to understand, and really put in those controls and checks around that data. Very key to if you're decentralized from a consolidation, you've got your local subsidiary controllers doing their data uploading, reviewing, and then submitting this. You want them to have control of their validations on all of that process. So that's looking at things from a current period validation. Let's now look at the opening validation. So this is now drilling down into the balance sheet side of things in a bit more detail. I talked a bit earlier about copying the closing balances automatically into the opening balance. We have that as a standard process built into the solution. When you think about your opening validation, this is going to be checking off that data and saying, hey, does my closing period last year, does that tie out with my current opening that I've got for my current period I'm reporting on? The answer should be yes, because this is that automated process. But this is one of those standard reports you want to have available to you. Oh, and by the way, I just mentioned the word standard. Everything you've seen up till now, except for those initial report dashboards, the initial reports that I showed you, everything is standard out of the box. So when you have your implementation, all of the templates, whether it's the journal template, whether it's the subsidiary financials showing that audit dimension, whether it's your attribute maintenance, whether it's your ownership, whether it's this schedule, all of these are predefined and give you the flexibility to utilize these in your environment. And they will update automatically to your account structure, your entities, your time, etc. So that's the opening validation. Let's now look at my movement validation. So the movement validation is really then the proof in the pudding around our cash flow. So think about that cash flow in a bit more detail. We've looked at this section down here, which is the movement on PP&E. So these numbers we've already tied out. So let's now come back into and look at this accounts receivable. We've got our opening balance. We've got our closing balance. So our variation is automatically calculated. Fluence is doing this automatically. Therefore, the variation we see here is tying directly back into my cash flow, sign reversed, into the change in AR. So we've got that full auditability, full audit trail around the cash flow. So that is why the movement dimension is imperative to have with any consolidation system you're looking at. The movement dimension is giving you this flexibility, but also giving you additional flexibility around currency conversion. So when you think about that advanced stage of the iceberg, it's really giving you that advanced functionality. So the movement dimension and audit dimensions are critical to any really fully advanced consolidation system that you need to look at. So let's look at this in multiple currency. We're looking at this in local currency. So let's look at this from the parameters perspective. Let's change this and say, I want to look at this from a euros. Change the currency. And what you'll now see is two additional columns coming in. We've now got CTA involved because this is at the opening exchange rate, closing rate last year. This is at the average rate. So our movement should be at the average rate. This number should be back at the current closing rate on the balance sheet. So December 2020. So the CTA on the opening, this is the number that is being calculated, not plugged, calculated on bringing back this number into the closing balance sheet rate for the current period. So that's what the CTA on the opening is. So bringing this number to the current closing rate balance sheet item. This number here is the flow. So this is converted at the average rate. We need to report that from the balance sheet closing at the closing rate. So this number here is bringing that back into the closing rate on the current period of the balance sheet. So we have that transparency, not just of, if I come down and look at the equity section, we're going to have CTA on the current exchange difference on net result. Yes, that's built and calculated and configured in the solution. We also have the transparency of CTA across every single line of your balance sheet. So when you look at your cash flow is going to be net of your CTA. You don't need to do any additional things to that. We're reporting on this column here. So let's just look at this number and we'll finish up on the cash flow. I can come back into my cash flow, go to my parameters. Let's just change this report. We're looking at it in US dollars. Let's look at it in euros. And let's just look at this number here. And when this resolves, we'll now look at our cash flow in euros, and you'll see that exact same number coming from that variation auto column within our movement schedule. So when you think about what we're seeing here, we're seeing the transparency across the board of the data. We're seeing the transparency of the currency translation. We're seeing the transparency of the change in AR, change in AP. We're seeing that across the board, not just from a perspective of understanding the data, but seeing that truly from a currency translation perspective. So we've now gone through a lot of the data submittal. We've imported data, which could be a corporate centralized function. It could be decentralized, and that could fully be managed by the subsidiary controllers. So can all of this process. This is going to give you the ability to understand and see that information. So we're now getting close to really understanding and reviewing the consolidation. The final thing I want to look at here before we move on to the kind of final couple of stages is to look at the intercompany reconciliation. When you think about intercompany is that matching to say, hey, what's a P&L intercompany match? What's a balance sheet match? We can hold different matching scenarios for all of those different accounts. You can have one-to-one matching. So one account should equal one account. You can have two accounts equaling one account, or one account equaling two accounts. You can do that one-to-one, many-to-one, one-to-many type matching. So we're going to give you that full support from an intercompany matching perspective, not just for your balance sheet accounts, but across your profit and loss accounts as well. So you're going to see this now from a total group perspective. We're now reviewing this from a total group. I could look at this from a subgroup perspective and really focus. I could go down into the subsidiaries and look at this from a subsidiary perspective if I wanted to. So this report, this matching, I can run at any level within the reporting side of things. What I also have the facility to do is understand the intercompany position in a bit more detail. You can see we're breaking this out by what is the receivable side, what is the payable side, income side, expense side. You can see it broken out by each of these subsidiaries. So receivable side, payable side. We're going to see that flipped around where you may have Houston as a receivable against Warsaw as a payable. So you're going to see both sides of the equation. We also have the flexibility to see, those differences. I could drill down the difference here and see this is that one account matching against two accounts here. We've got a difference. We might want to investigate that difference in a bit more detail. You can also do tolerances. You can say, hey, anything outside of this difference, we want to book just as a standard difference into the report and only show me things outside of that difference. So when you think about that, that's giving us the flexibility to really focus and say, I only want to see differences maybe outside of $100 or $200. Anything below that, we're going to book that as a standard suspense when we run that elimination, when we run that consolidation. So full flexibility around viewing and only focusing what you need to have access to. We also support the what's a transaction currency as well. So when you think about intercompany, you may have fixed your intercompany at a historical rate. Now with current rates, you're going to have a difference maybe due to currency. So you want to have the flexibility to say what is a real difference and what is an exchange difference. And you can see in this perspective, we're looking at this in local currency, and you can see that this is actually a real difference. So this is a difference that needs to be resolved between the Houston and the Warsaw entities. So this is where you'd need to get into some details and understanding of that. Now, if we look at this Houston versus Warsaw down here, so we're looking at the opposite side of the equation, a different intercompany match here. Let's look, we got a 326 difference. Let's look at the details here. And you're going to see now, when we look at this in local currency, it's actually matched off. So this is a difference that's okay because it's due to those exchange rates changing from maybe an override rate or a historical rate. We've got an exchange difference, therefore we need to incorporate that as part of our journal we're going to book. So we have that full concept of what is a real difference and what is a transaction currency difference, and the difference between those highly visible and highly available within our intercompany matching routines. So think about intercompany really as that process. This could be a corporate function. This could also be pushed down to those subsidiaries who are separated and give them the ability to do all of this process and approve their intercompany and then track back that intercompany to those individual subsidiaries. So when you think about the consolidation, you can now see we've completed some of those tasks. We can now see we're in review consolidation. So let's take a step back and look at where we were from that overarching workflow perspective. Europe and Canada have completed, great. You can see we've got the USA consolidation. You can see that we've automatically completed these. You can see now we've run consolidation. So consolidation can be a fully automated task. It could be something that's fully automated and something that runs when you complete these areas. So we're now in that review stage of our consolidation. So what I can do now is ultimately come into that stage and say, I want to now review the consolidation. I could look at a number of different reports. I won't go into every report. I'm going to focus just on one report. So let's look at our balance sheet consolidated. Our balance sheet consolidated is really understanding what's happened in the consolidation. So when you run a consolidation, whether it's automatically or whether you initiate it, it's going to go through currency conversion. It's going to go through the intercompany elimination. It's going to go through the investment elimination. What is equity, and eliminate those areas from the consolidation perspective. It's going to go through the booking and the currency translation across all of those different configurations that we've seen, that we've investigated all the way through the demonstration so far. So this is your consolidated balance sheet. This is really what everyone wants to see. Yes, it's nice to have those fancy reports, but this is understanding, has my consolidation worked? Parent company, sub, my eliminations grouped together in this column. We've then got those eliminations broken out, and you can see the equity elimination here. So that entity we own at 30% from the USA perspective, you can see 100% of its books are being eliminated. We'll see the pickup side of that because Houston owns 30% of that. You'll see that in a moment when we drill down and understand the data in a bit more detail. We got the shareholders' equity side. You'll see everything now that's being eliminated in the equity section of your balance sheet. You may want to look at the details of this. So we have the ability to drill down, not just into the columns, but also into the calculations that are making up these numbers. So you can now see that column broken out to what is on the Houston side, what is on that Los Angeles side, what is then on that San Francisco side. And you can see the minority, that NCI is associated with Los Angeles. So you can exactly see that one column then broken out to exactly where those journals, those eliminations are being posted and who they are attributed to. So I can do a right click and I can do calculation lineage. And what calculation lineage does, it will now show me the calculation right behind that minority. We own that entity at 75%, if you remember, up until December 2020. This is 100% of the net gain loss profit of the Los Angeles entity. Therefore, this is a 25% that we don't own that needs to be attributed to that minority shareholder. So we're doing that. We're showing you the calculation. We're showing you the audit trail behind that. Other solutions don't give you that drill down audit trail. We're giving you that down to the calculation. A very key piece of functionality to understand and a key differentiator when you're looking at this from an overarching perspective. So we're giving you audit trail, not just what's changed from a journal, but also on how that's being calculated as well. So that's one bit of auditability. Let's now look at Houston and see the contribution Houston's making to the total USA number. And you'll see this is broken out by what came in from your source system. You'll see those adjustments, whether they are manual. You're also going to see that equity pickup line. So this is the equity of the assets, it's a share of the assets we own, liabilities, and also the profit we own. So you can see now, this is what the Houston entity owns of that New York entity from a 30% equity pickup perspective. Let's come down and you'll see the share of the current earnings. If you look at the numbers, you can do the calculations, but this will be 30% of that. So you're going to see exactly how these numbers are made up. You're going to see the local reporting. So everything goes up into the local reporting of that entity's books. You'll then see what's been booked from an intercompany elimination perspective. You'll then see the total Houston, and then you'll see how that is contributing to the total USA group. So a great analytical report, a great way to see Houston contributes 4%, I believe, of the cash number to the total USA cash number. So you can see exactly where the contributions are coming from, subsidiary by subsidiary. We've also got the full flexibility in here to, comes up very often, drilling into data source. So I can do a right click and I can say I want to drill into that data source. And this is going to show me, for example, the invoices or the transactions that are making up that total number we're seeing in the consolidation. So we don't just have drill down within the consolidation and the Fluence consolidation hierarchies. We also have the ability to drill back into that source system to get that level of traceability into the numbers. So we're providing that traceability, that auditability, the calculation lineage across the whole of your consolidation. So really, we're now looking at everything and saying, right, great, we've now completed the review. So let's go ahead and just submit this. Once we submit again, it's then going to tell us that we're now in that sign-off approach. I can now come in and say, I want to approve this. And I could look at those validations again if I wanted to, but I could come directly in and say, yep, everything looks great. I'm going to do that final approval. So we've got the concept of approving. We've got the concept of rejecting data. We can also come into here, and if we want to, we can look at those reports in a bit more detail. So we've got Word integration, PowerPoint integration. This is Microsoft Power BI integration. So we can have integrations into other reporting solutions as well. So once you've done your final completion, you've then got the ability to look at your reports and analysis. I can then say this is complete. And I can then see that now we are now in that final consolidation. Let's go back to my initial workflow that we started off on. And what you'll see now is we have all of those sub-consolidations complete, and we're now looking at that group consolidation. So I don't need to go into this process in a bit more detail, but it's really showing you that end-to-end. We start off with the administration, what's changed. You then go into the subsidiary workflow, importing data, reviewing, journaling, intercompany eliminations. You're then running that consolidation automatically. You're then going through those final approvals and then into that final corporate consolidation workflow. So that's where I come to an end from the overall demonstration. Now, this demonstration is broken down not just into kind of the power of what I just showed you, but we can do lighter, shorter demonstrations that really focus on some of our key differentiators. But I wanted to give you that overview because that really shows not just where the power is, but also some of the key benefits, some of the key areas that need to be focused on from a differentiation perspective. So thank you very much, and hopefully you enjoy the recording. Thank you.